So that was also, we had some learnings there, but good that we are doing this on S19s and not any of the latest stage hardware, because it's definitely something that you need to get comfortable with and you need to get more learning and you need to see how this goes before you roll it up in the latest stage, very, very expensive, very high efficiency fleets. Yeah.
And so when that's the degradation of the machines, what about the implementation and the network interface and the programming? Did you guys custom code all of that to work with the meters? And is there obviously special types of meters you need? Most Bitcoin miners would have to upgrade their meters. And I know in the US, some of the programs to get into, the meter might be a year out. Are you seeing the same thing in Europe and where you're operating, where the meters are just hard to get? And then to that point, expanding it about the availability of these meters, what's the scalability of these programs? Do they start to max out when you had 500 megawatts of this load, or is there really so much demand because of all the renewable energy and the inherent problems that you think the market can continue to grow? Or is there really a local constraint based on the local economics or local grid needs?
That's a very good question. So basically, starting on the technical side, so power meters, yes, it's a topic. It's also, it has long lead times here, but not like a year. It's like a 3 months lead time or so, like 3 months. And as you said, it's also something we learned, like you need to have a very high degree of granularity, like in 0.1 seconds interval that basically takes the energy to be able to communicate the very precise consumption to the national grid operator. Also on the miner, we actually looked into working with existing firmware, also existing mining maintenance systems. And we looked into like integrating as much as possible so that we had just a very limited amount of code that we would need to write ourselves. But our software that we created is kind of a plugin that can be utilized with any miner maintenance software. Some of the formats, they have already drop downs where you can choose like a minor control for flexibility. And we are basically also doing similar things. But we actually also had to adapt the firmware. So we actually worked with unfortunately, I can't say whom, but a very well-known firmware producer that has also a very good understanding of energy markets. So they have really seen what we are doing and they were quite supportive. So we are using one specific firmware that has a function that allows us to communicate very fast with the miners. And and then we basically looked into, okay, what security, what does the stock firmware, what does the miner has to actually slow down any energy consumption? We even have built in a function so that the hashing doesn't necessarily start directly with the ramp up of the energy consumption, because that's also something that the miners want. They want obviously to hash as much as possible with every watt that you put in. So that's something we needed to kind of circumvent. And then, we built this whole construction that now allows us to be really fast and really responsive. And also, what is sometimes a bit underestimated, really accurate in our consumption.
And so you guys have built up this firmware from the ground. You're using, custom firmware. You have custom coordination layer. You have not custom meters, but top of the line meters, sometimes a long lead time. What about the ability to add capacity to a certain market? Let's say a grid is 500 megawatts. Does it start to lose profitability at 50 megawatts, 20 megawatts, 100 megawatts? What is that look like, the saturation there?
So the flexibility market size is big enough for all of the miners to participate in. So in overall Sweden, it's across the different energy zones, it's more than a gigawatt, which is on a daily basis, basically participating in these flexibility programs. The whole European mining market is probably 500 megawatts. So it's by far not the same as in the US. And so now translating this also to the much bigger energy markets in ERCOT and PJM, I'm just saying like the Bitcoin miners, for enabling the energy transition and the amount of flexibility that is required, we are just a piece of the puzzle. Like we are by far not big enough to really saturate these markets, which is great. But we are actually bringing a great flexibility to the markets and we're helping them a lot. Also feedback that we get from, for example, Svenska Kraftnät, which is the Swedish national grid operator, is very positive. And I think similarly also ERCOT grid operators, they really like that they can actually curtail all of these miners. And hopefully they will also even like it even more, like when we come to the play and help them to become even faster.
And that's the key, to your point, to a renewable future, which is really what everyone who maybe opposes Bitcoin mining in its energy consumption actually desires. So how do we bridge that gap?
So I'm an economist. It's this kind of market. I think about these markets still like in model types. And we are basically what Bitcoin miners can do is just that in a world where you have just more and more intermittent energy supply. I think the global intermittent is basically solar and wind, right? So the share of solar and wind is expected to be over 40% of the total energy production by 2035 or something, 2030. So this means there is a huge amount of intermittent energy generation expected to be in the system in order to make this actually not only for the grid to be reactive enough, just to be flexible enough to not having like these situations where the grid might be congested or might have problems and then it might lead to blackouts and so on, but also to make actually all of this renewable energy to monetize it, to make it profitable. We basically need Bitcoin miners in the overall economy. We basically are the baseline, the base load, still the consumer of the last resort. But they are always there and they can always consume when makes sense for them. But they also can just not consume and ramp up really fast when they need to take out energy from the system. So they are really the perfect piece of the puzzle, one piece of the puzzle, which is complementary to batteries, complementary to rechargers and other types of flexible loads that are there. And that is just a very attractive, very good also diversification.
And do you see batteries eating away at this market share, or are this complementary?
Our product, which is now the kind of the flexibility product, batteries are our biggest competitors, I would say. So they trade on the same kind of flexibility markets and they do some energy trading. However, all of the calculations that we made so far have shown that actually on a unit economic basis, on a 1 megawatt basis, a flexible Bitcoin miner is much better than the battery. Why? One is it is cheaper. For such kind of products, you don't need to use like the latest stage of equipment. We expect like an uptime of like 50%, maybe 30%. So that's fine. You can use S19s. They are there on the market. Easy. It's cheaper. Second is it has an infinite ability to consume or not consume. Batteries are full or empty. Like they are limited. They have the capacity of sometimes 2 megawatt hours or 4 megawatt hours if they're good, which means that they are very limited in their flexibility. Best example for me is that also, sorry, I'm talking a lot about Sweden, but in Sweden in the last winter, we had unexpectedly low energy prices. They were very low. And also all of these load balancing revenues, the profitability was very low. So for batteries, that was shit, because they didn't make money on the load balancing programs. And additionally, there was no spread on the energy. So they couldn't make a spread on the trading. For the miner, it's still great. You're online for like whatever, 98%, and you just mine. And vice versa, if there is times where the energy price is very high, typically also the profitability of the flexibility is very high. So you can just be offline and just profit from being paid for being able to turn on whenever you're needed. And you can do this also for 24/7, whereas for batteries, the spread is still very thin. So the second thing is that this infinite ability to consume is a very distinguishing factor. And the third advantage is that there is an uncorrelated revenue stream. Batteries are 100% depending on energy markets. For the flexibility Bitcoin miners, you have the flexibility markets and you have Bitcoin. So that makes you actually a much safer asset to invest into.
And are the institutions that you're talking to, are they getting this? Are they seeing this? That like, wait a second, this isn't Bitcoin. This is energy disguised as a computer.
To be totally honest with you, like all of the investment managers we have spoken to, we spoke to basically the tier 1 infrastructure funds in Europe. The investment managers, the level, they love it. They say it's so great, it's incredibly interesting. But then like still, they were so afraid of bringing this now to the investment committees, which is a pain. And I think it has a lot of reasons, because a lot of them, they have a lot of exposure to batteries. They have invested a lot in battery markets. So they don't want to really say like, okay, there's a better product, but it's not the easiest sell to them. So the mind shift is still not there. And for a lot of them, also Bitcoin is still a problem in Europe, which for Flexionics is not a big problem because we are actually very profitable and we can also grow like this. We are looking right now, we are still trying to get an institutional large-scale battery investor on board because we think that basically we can just improve their portfolio so much and we can just be a great add to their own balance sheet and will help foster very fast growth. But that there's still this concept, which is very clear to us, is still not a super easy sale in the financial markets, I must say. Still very innovative.
We get 1,000 hair dryers. We plug them into PDUs. and we control the
Yeah.
hair dryers up and down, right? To do the same thing, but without the extra revenue stream. That's what we're doing. We're making heat
Yes.
and
It's
turning
yes.
the heat up and down.
It would also work, like economics would still work. It would still work, yeah. Sometimes it's not purely logical what is being done, and there's a lot of influence also in the
So as
infrastructure.
an economist, what do you call that as an economist?
I would say it's not Pareto efficient. It's not efficient. It's not an efficient market, but we're getting there. And with basically also the push also from the US, so where Bitcoin is now on the brink of becoming also basically a state reserve and federal. So that helps also to basically these old fund managers drinking their cappuccino or their matcha latte in Berlin or cappuccino in Paris. They also wake up.
So 5 years from now, where do you see your company and where do you see this industry? And we talked a little bit about what happened in Spain. This market's only going to become more volatile.
Yeah.
The grid is only going to need more control and frequency. What's the future look like?
So basically, I mean, if you want to look 5 years ahead, let's also look 5 years back. So, I mean, now it's 2025. So in 2020, I think that people still haven't realized that, as you say, as we are peeling the Bitcoin onion, we are basically abstracting it even more, right? So in 2020, people started to realize and started to dig into the interaction between energy and Bitcoin, right? And how that can be monetized. So they started to look into basically excess energy, really like remote assets and so on. Now we are starting to look into flexibility, but if we abstract it even more, the Bitcoin miners, they are basically reactive on any type of signal.